Hello and welcome to Crypto Weeklies. In this video, we analyze Bitcoin. Now that Bitcoin is above $72,000 again, as previously mentioned on this channel, that there is a likelihood that in March, price of Bitcoin could go as high as about 80k. That's the line where the price action for March could go based on historical price action. Again, this is not financial advice, and you can check how this forecast was. Again, not just bull posting in the middle of a counter trend rally, but you can check over here. This is my own website, cryptoweeklies.com. Over here you will find the YouTube channel link to Crypto Weeklies YouTube channel, and again this site holds all of the major charts and analytics that are part of the discussion on this website. This website is available for free for everyone, and no sign-ups or anything required. So coming to this YouTube link, you can see over here again all of the major crypto related content generated on this YouTube channel. All of the videos are over here, and over 7 days ago we made a video on this channel where there is a likely bounce for Bitcoin in March into 80k. You can check that video out. Again, and arguably one of the more important videos over here is bottom pattern analysis and the regression bottom analysis for Bitcoin. Coming to the reason why 80k was likely in March is based on this momentum candle or Heikin Ashi based candle for Bitcoin. These are the monthly candles. Looking at 2022, March of 2022, after a series of negative months, since for example in 2021 this negativity or bearish candles in terms of momentum candles started in December, whereas in 2026 this started actually in November, so 1 month prior. So after 4 months of continuous bearish momentum, there was likely a candle where again the body of the candle is barely visible. It's a very narrow candle with minimal width, and this formula for these momentum candles are, you can notice that each subsequent candle starts at a midpoint of the previous candle, and regardless if the color is green or red. This is because it tries to contain the momentum of prior months. So the midpoint of let's say November's candle became December starting point. Similarly, midpoint of December's candle became midpoint for January, February and March. Now for March of 2026 to look like March of 2022, essentially the entirety of March needs to be in this area where the price of Bitcoin goes to the top of the channel, closer to that 80k level. This was one reason. The second reason being Bitcoin held again likely held this area of support, this yellow line over here in the March 2025 drop to April 2025 drop. There was a likely scenario based on prior bear market from May to July 2021, in the bear again in the middle of the bull run, like how there was a correction and then a rally to a higher high in 2025. Similarly, in the bear market, after this level was breached in the bear market, like it got breached in May 2022 and in January 2026, there was one rally back to the yellow line over here, and that yellow line is at around $79,500. So two reasons for that. Again, coming back to the third reason is the machine learning based price analysis for any counter trend rally for March. The peak forecasted for March at a weekly average level is at around 81k. This is the 10 to 12 year worth of weekly average price fed to the machine learning model trained on seasonal ARIMA and LSTM based machine learning techniques. These are all in-house trained machine learning models and using standard deviation based confidence levels. identifying if Bitcoin is overvalued, undervalued, or what could be the counter trend rally peak or the bear case. Let's say starting April or May of 2026, there is a non-panic drop. That drop could take the price action as low as about 60k with the current data in hand. Coming to the diminished decay model, that is using polynomial regression based fair value estimation of Bitcoin. Again, this is a mathematically derived fair value based on 12 years of price action data, trying to cut the price action into two halves, which is kind of equidistance, dividing the price action into two halves, where the top part is overvalued and the bottom part is undervalued. Typically, whenever the price action is not just lower than the fair value, but one standard deviation residual lower than the fair value, that's when accumulation for Bitcoin, historically speaking, makes the most amount of sense. Again, you can go even further to standard deviation band, but there is no guarantee that Bitcoin has to go in every single bear market to that 2 standard deviation undervaluation band. You can see this band in 2020, 2018, 2019 bear market price action did not even go to this band. Only that March 2020 drop, which is again once in an every 100 years that kind of a event occurred, and then price action had to go to that level. In 2022, again price action easily in that during that FTX collapse and the bottom part of the bear market towards November 2022, the price action did eventually go to that level. But again, it's an unlikely scenario to go to always bet all on price action going to that 2 standard deviation bottom. It is not a healthy approach of to viewing the market. Is just my opinion. Again, if you are only looking at those areas where the price action goes lower than the 2 standard deviation bottom, you are essentially looking at over the course of 12 years of Bitcoin's price action. You're looking at couple of weeks over here, amongst that couple of weeks over here, and a couple of months, just to be generous, over here. So 2.5 months in that 14 years worth of 12 years worth of price action history. Again, it's way too low for having a accumulation phase which is stretched out. So that's why, personally speaking, that 1 standard deviation bottom is typically where the price action could go in the middle of the bear market. This level currently is at around 59k, but it's a growing function. So what's 59k at the bottom today could well be 61k in April or May. So that's something to watch out for. Looking for the adjusted risk levels for Bitcoin. The summary risk for Bitcoin, normalized summary risk, is at around 10%. In the last bear market, it went as low as about 2 to 3%. So that final ultimate drop for Bitcoin has yet to occur. So that's something that could conclude the bear market of 2026, maybe in May or in later half of the year. So the time weighted average price risk, though, stays elevated. Now the deviation between the price and the time weighted average price is 161%. This model helps understand look at the price through the gravity of time. That means not just looking at the current price with respect to some sort of a moving average, but looking at with the intention of beating the clock, where accumulation really makes sense, where the price action is either closer to the risk levels where typically the asset spends very little time. Let's say that cutoff point for Bitcoin is whenever the risk level is lower than risk level 4. You're essentially accumulating at some of the best times in Bitcoin's price action history, looking at the bear market of 2018, 2020 crash, 2022. So right now the risk level is risk level 7. If it, let's say, to be really generous, let's say go to risk level 5 or low, that's when accumulation for Bitcoin makes the most amount of sense, personally speaking, as well as backed by data. So that's where, again, the time weighted average price model helps identify if the asset is in accumulation territory, or the opposite of that is, let's say the risk in the future gets elevated to, let's say, risk level 8 or risk level 9. That's the distribution zone for Bitcoin, looking at historical peaks and stretches from the time weighted average price based um, interpretation of what the asset has spent most amount of time either in accumulation zone or in distribution zone. So this is one of the more important models on the website. You can check them out. Last but not the least is the composite analysis of what price action could do in a bear market, like towards the end of the bear market. For example, over here, Bitcoin, the as this chart would suggest, the bear market bottom for Bitcoin could go as low as about $40,000. That's the worst case scenario predicted by these time weighted average price model and 20-week simple moving average model and the regression model that we just saw. That's the worst case scenario. The best case scenario, let's say everything goes well, Bitcoin recovers and has a healthy bull run next time around. The bull peak forecasted is at around 200k, the midpoint of the bull peak, which is from here it's around let's say 3x. But if let's say the bottom is closer to 50k, or the worst case going to 45k, the rally from bottom to peak could be as high as about 5x of this time around. Last time around it was from $15,000 to $120,000. You can check over here. From bottom to the peak, the 2022 bottom was at around 16k, 15k, and the 2025 peak was 126k. So from bottom to peak, the rally was essentially 8x. So with accounting for diminishing returns, this time around from the bottom to peak, price action could rally closer to 5x. And with that, I would like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.